Do you know there is a chart that real estate speculators in Canada don't want you to see? Yes, it's true. There is a chart that I built last decade. It became obvious after I left the investment business that they were going to kick the can down the road. And how far was that going to go? Obviously, politicians, the political cycle is always short term. And this is why these cycles repeat, right? We don't learn the lessons of history. So we have an emerging crisis. Now, what is the most leveraged asset in the world? Real estate. And real estate's done extremely well, or did extremely well, from pretty much 1984 during the monetary wave, right? The fall in price of credit. And think of it. I posted it today on Twitter that if you're under 65, your whole adult life has only experienced the falling price of credit, which caused Ponzi finance and a massive credit bubble that now is larger than Japan's, both privately and government-wise. So what is the chart? And really, today is going to be only a focus on one chart because it tells you so much. There's so much in this story. Now, I'm always amazed of the conjunctive wave and how much I've learned from this book. Since Keynes took over, I feel when I went on this journey trying to understand what happened and how to manage capital successfully, and I fell onto this, conjunctive theory, right? And all it is, it's a social cycle that lasts almost a lifetime. And it's like you're finding secrets that nobody else has access to. And that's not one you want to keep to yourself, right? A lot of people ask me why I left the investment business. There's numerous reasons, right? Really, I lost my passion for it. Managing wealthy people, it just didn't turn me on anymore, right? There was no purpose. I was bored. I was watching a lot of these wealthy people work hard, save, invest, and their kids were going to blow it away. Very few. Because there were a response, I got to do this for my kids, do it for my kids. No, well, how did you become wealthy? You're not teaching them the lessons that you did to become wealthy. But obviously, I saw that this was going to end badly. And when I got involved in the investment business in '89, it was to help people, right? That's what attracted me to it. Never dreamed I'd become a forecaster, right? Because I'm just curious. And when you have a devastating outcome financially and you're curious, you want to know why. So obviously, anything to do with conjunctive, and the reason why I'm alluding to that, I got another book. Can you see that? Good. It comes up there. The Conjunctive Wave. It's an older book, and I'm collecting anything in it, any interpretation, whether they were right or wrong or early. I call them early. The thesis was not wrong. It's just that with the fiat monetary system and the financialization of the economy, we've just stretched this longer. And that's why we have the bubble and everything today, right? There's a bubble in real estate. There's a bubble in bonds. There's a bubble in government. The government model, centralized model, as a business model, no longer works. It has all these expenditures and it doesn't have the economic growth to deliver it. That's why this fourth conjunctive wave, which is ending, is the end of centralization, or big, right? The WF is just a way for the elites to continue their power. And that's not how cycles work. And I understand why everybody's concerned. They have this, they have everything in the plan. Look at the counter revolution we're seeing. The people are saying enough. 20% of the public will never accept it, no matter what you do. And thankfully, those are usually educated and aware of what's going on. So now, while it does not suggest we will go through a lot of economic hardship, the purpose of why I've done this was to help people, right? And I could help you become more successful investing. with your business, accelerate Canada's decentralized renaissance, right? That turns me on, right? And it has to be a win-win. And I felt before I was in a win-lose situation, right? Does that make sense? So anyways, so let's get to the chart. And this is a fascinating chart. Now, I want you to look at this chart. Now, it might seem depressing or bad news, right? But look, this is the reality of the business cycle. And if you prefer to evade the reality of what is occurring and what will occur, then you're going to pay a price. That's how these cycles work. I don't like it, even though that those of you who follow me, will profit from this. It's not something I want to happen. But society didn't learn from the past. So we have an economic winter or a depression knocking on our door. It's inevitable. You know, I hear it. Central banks and governments, they can't. They are close to insolvency. The central banks bought bonds at the top in 2020. They're losing money. And the currency, their job to protect the value of the currency, in Canada, it's lost 96% of its value. You know, this is the problem of linear extrapolation. We think that what has occurred since the 1930s, where government became on this large S-pro, will continue. It's not. This is cycle. Linear projections is why this ends up. So anyways, let's look at the chart. Okay. So I asked real estate, those in the real estate field, and I asked a question: what drives the real estate market? And they told me a whole bunch of stories, and I said, well, what's, demand and supply? Well, that's one aspect of it, but there is a lot of things that drives real estate in Canada. It's not only demand and supply, but the most important is affordability. Now, you think if you have rising demand, women entering the workforce, wage growth, and then the price of credit, and then, of course, mortgages and gross debt service ratios, all those are important factors that drives real estate. So what I did was, I had nothing to do on a rainy day, and I said, why don't I find out how far Canada's real estate cycle goes back? And I found data. I had to splice it, but what's great at the time, that's why it's in 5-year increments, is that there was data and how many 30 to 34-year-olds. Now, this is a generalization, but this is what pushes, right? This is new demand. New demand. And by the way, I'm not taking into account immigration because immigrants don't have money. Let's get serious. If anything, we're seeing on the streets of Toronto, they're broke. So that might cause rental issues, but to think it's going to support asset prices. If anything, it's causing a spurt in short-term inflation with new demand that wasn't there in the country. Does that make sense? So anyways, I splice this together, and it's the only chart like this in Canada. I don't know anybody who's built this chart. So what I did was I took all the data up until 2019 in Canada, and then I went to the United Nations, and they have a prospects for the future, 30 to 34-year-olds. Now, I use median variant because if you're using high variant or low variant, that's part of cycles. So we want to smooth that out, and I don't want to, like, people are extrapolating this immigration boom. Well, it will collapse once it puts stress on the system. So you're assuming that's going to continue, and this is why 99% of forecasters fail, right? They're just linear extrapolators. They're wrong. They understand cycles and how they work. But here again, if you look at the chart, so this is how I have here. Look, this is 200 years of data. Where have you ever seen anything like this, right? Now, what's interesting is when you splice the data, then I wanted to see the growth, and it's not in logarithmic, so I put an exponential trend line. Then I looked at the peak, and by the way, you see 1960? Why is that a peak? And then you see the drop-off into 1970. Do you know why? Because that was the Great Depression 30 years out, right? People weren't having kids. And then once we came out of the Great Depression, people started having kids again. And then, as we know, from about that point on, we had this massive baby boom. If anybody knows anything about real estate, this is where we had the massive boom. It was the start in 1970s. Real estate prices went from three times income to about four. It never went beyond that. The reason it went to four is women were entering the workforce and they were allowed to go on the mortgages. I wasn't aware of that. So that's what pushed up prices. But still, there was this huge demand of baby boomers, I'm one of them, that pushed up prices. But I'm at the tail end. And this is a chart I wish I had back in 89. And you can see that it's pretty good at, it wasn't the exact top because the top was in 89, but what caused the collapse was rise in interest rates. And that's what caused the bear market to start. And then, as we know, real estate was in a bear market until 2000. So it just did a great job of capturing the time frame, right? It's not exact. I'm not, because there's other variables that drives real estate prices, but the most important thing. So we did have a peak, and then we did have a great bear market in real estate. And during the 90s, nobody was interested in speculation. It was easy to find home for 25 to 50 cents on the dollar from the peak in 1989. Yes, I know that's unheard of today with this craziness, right? But we have a massive credit bubble, and people just want to deny that is not the case. Now, what's interesting, even though I have two models, this model did peak or does peak in 2024. And then 2024, I call it the real estate cliff. So that's why we still have some pretty good demand. It's not immigration. Immigration is causing other issues, and people can live in, like my parents did in one house and so forth. But I take into account the millennials, those who have been working here and have saved the money or they're getting help from their parents, right? So that's why the data after 2021, 22, it might show a different outcome. Let's be honest here, but it's not going to impact real estate as you think, because they don't have the savings, they don't have the help with the families, right? They're all new to the country, and Stats Canada's confirmed their incomes are next to nothing. It'll take 5 years for them to normalize. So that's 10 years in the future, and it'll impact real estate prices. But if you notice here, into 2032 is a great bear market in real estate, and that lines up with historical real estate price. But after that, unless there's another baby boom, the prospects for real estate prices going up, that game is over. Because the demographics or the replacement rate has totally collapsed. So this thesis you want to believe that you're going to see asset prices the rest of your life is extremely unlikely. If we have a baby boom, more than likely in the 2030s, then that's 30 years out, right? So you need a baby boom, another baby boom, and that's very possible with the new technologies. And usually it happens after economic winter, another baby boom, and that will solve most of Canada's demographic issues. Immigration does not solve it. Immigration, if anything, accelerates its aging, which makes the pension much more fragile, even if it had lasted 2030. Okay? So again, take a look at this here. This is 200 plus years of data. You can see the cycle. You can see, by the way, during the long depression of the 1870 to 1896, there was a rise in demand. Do you notice during the 1930s, there was rise in net demand, but real estate prices collapsed? So this thesis that this alone will guarantee real estate prices going up is ludicrous. There was always rising potential demand, but affordability, jobs, income are what drive, confidence is what drives real estate. And once you lose confidence, as we saw in the 1990s, then the bubble will burst. So there's everything you need to know. And this is why most real estate speculators don't want to see this. That's fine. That's your choice. And you want to ignore the reality. But this is history. It's not 10 years ago, 20 years. It accounts the baby boom, the millennial boom, the exponential rise, the final peak in 2024 into the next 30, 40 years. Moreover, you have rising interest rates. Like through my whole adult life, right? I'm in the mentoring stage of my life. I've only seen falling interest rates. That's over. And I recall my uncle bought a home in the peak in 81. He still lives in that house, and his mortgage was like 19% or something. That would totally implode real estate. We have a little tiny rise to 3.5%, and 25% have defaulted. It just tells you how vulnerable. And people want to deny the monetary wave or the contractive cycle. That's fine. Nobody's here to force you or believe this. I've been studying this for 25 years, and the longer I study this, the more I'm convinced it's not even a theory anymore. It's actually a reflection of social cycles, right? Anyways, so I thought that chart's why you're never going to see any speculator show you this chart. It's our little secret, and those that want to benefit from it should. There's one book I want you to recommend to read, and this is Robert Prechter's Socioeconomic Theory of Finance. And I got turned on to him. I was actually highlighting this old book at the crest of the tidal wave. I started first reading his stuff in the 90s, and it's a great book. Look, I get Prechter has been early, but his thesis is correct. If anything, it's sort of like a doctor says to you, your blood pressure is 140 over 90. Your chances of a heart attack, stroke is going to, increase dramatically. And person says, yeah, who cares? Next time it's 200 over 100. And next time it's 240 over 120. It's an eventual death. It's the same thing. Prechter just didn't see how ridiculous society would push the credit. And now we know that unproductive credit is not generating the returns to support the asset bubbles or support government programs, right? We got a way of productivity, right? All this, indebting society, how is that productive? We're doing everything just to support a home. These people should be working in productive industries. Look, the BIS also in 2015 warned that the financialization of the Western economies is hindering economic growth. And we had the blow-off, as I call it, in 2020-21. We can't leverage anymore. And everybody says, yeah, Joseph, interest rates are going to fall. But they did fall. They fell to zero, and we leverage from there. You need a point below the leverage to help mitigate the collapse. Does that make sense? Anyways, I do get a lot of people asking me about specific advice. As I said, I can't do that anymore because I'm not an advisor. I did that for 23 years, and I enjoyed it at the time, but it's not what I do. But I did develop a model, how to allocate assets, right? And the Substack account, for now, is the only place you have access to it. That's for the paid subscription. You can get in for free and just try it out and see the stuff that's there. But the paid subscribers, and I've made it affordable for anybody. So, and I did that on purpose, right? It's just that every person can have access to the model. It's only $20 a month, or if you want to pay for $200 up front. You have access to the model. It tells you exactly what to do, right? It's not based on what I think or my emotions today. It's based on the data going back since the Italian Renaissance, the printing press, the information. Really, when this information revolution, capitalism got started, and right. And remember, Kondratev said that this is evolutionary economics, right? We're destroying the old system. The old system is going to collapse. It's no longer sustainable. That's the good news. We're going to have normal real estate prices. So the kids, my nieces and nephew could buy a place. So the future is healthy for people. With the stem cell and genomic revolution, that changes everything. This new information revolution, education. The public education system is going to collapse. The healthcare system is going to collapse. They don't work anymore. Let's accept it. Why is a post-secondary education cost any more than $3,000-$4,000? You could hire. I think Jordan Peterson is looking at this as disrupting the education system where it only costs you $3,000-$4,000 with technology. This is why I do this. With technology, you can learn anything you want at home or in an environment and not pay or go into student debt for the rest of your life. This is all good news. So anybody who's trying to hang on to the past, to your demise. If, the history is good to learn from, and, memories are nice about the past and how it was, and music remind us, but look, the current form of government no longer works. The current monetary system no longer works. The sick care system cannot support an rapidly aging society that with a diabetes epidemic. Let's be honest here. The education system's so expensive. Home prices. I mean, the whole system is collapsing. But this is what Schumpeter saw, Kondratev saw, right? Collapses, and out of that collapse emerges a new paradigm. And we won't recognize the economy in 2040. It'll be totally revised, and that'll be revised to the entrepreneurs. And the public accepts the entrepreneurs because they're improving their way of life, making their services cheap or more affordable, and enhances their life, right? I mean, everybody thinks that these psychopaths at the WF are going to change your life. They have to lie. It's a methodical lie. They think that they can stop the Kondratev cycle. Now, I've said before, the Kondratev cycle is a social cycle. I thought I was learning about economic timing and stock market timing too. And then as I read all the books, it's really a social cycle and how we act at each part of the seasons, right? So it does get very dark during economic winter. But again, what I'm suggesting and I'm saying is they're just going to cause a lot of damage. And if anything, elected representation by governments will probably collapse too. We'll probably a direct democracy. We have the technology for it because our politicians are not doing what's in our best favor. If anything, they're doing it against. So that's another future. Wow, this has gone on longer than I thought. Okay, well, it's educational. I always do like to make sure that I'm informing you and educating you and red pilling you slowly on the long wave. Questions. You know what? I'm impressed with the questions that I'm getting, and I actually like it. And if it's a reasonable question, it can't be specific. I can say, well, I've got $1 million. Should I put 20,000? I can't. I don't know you. I don't know your life cycle, your savings, your investment risk, whatever. I have one model so you can make as much money as possible, but cognizant of the risk of valuations and where we are in the business cycle, and to avoid losses. That's it. We want to participate in a bull market, and when a bear market is on its way, we want to leave. That is it. That's why those who follow me, it's very defensive right now. And nothing has changed this, even though the markets in the U.S. are rattling a little bit. The leading indicators continue to worsen. And these things have a perfect track record, not somebody saying, oh, well, the market, there's no recession. Well, you haven't studied history, so why should we listen to you? So last point, please like and subscribe. Yeah, and there is that notification bell. I use it too, right? There's certain people I follow that I believe are brilliant, intelligent, articulate, and knowledgeable in areas that I'm not. That's all I do. I follow and listen to people who are wiser, smarter, and more intelligent than I am, and are great at that subject. What I'm good at, since I'm a lifelong learner, right, is I am good at assimilating that information and then building a model. There's not much I have to change regarding the economic model or the asset allocation model. That's pretty much set in stone. What I am cognizant of are things like the emerging BRICS gold-backed, central bank gold-backed currency that is in conflict with the U.S., right? It's the West. If the developed world doesn't change, we're in trouble. We're into a significant decline in standard of living, especially as the middle class gets wiped out. And if we don't move to the decentralized renaissance, that is it. We become a third world nation, inept, bankrupt, caught up into a theory of how it should work and central planning. Ultimately, those countries, states, and provinces, that recognize that and they want to improve the standard of living of their family, of their country, they might split up and go in their own direction. And we need to watch Europe for the first signs of that. So the key takeaway is, look, this seems dark, but it's the reality, right? I mean, wouldn't you want to know that a hurricane is headed your way and could just wipe you out, destroy your house, could kill you, could devastate your family? Of course you would. That's all the long wave is. It's this social cycle that repeats, right? It's inevitable, unpreventable. It's bigger than governments or central banks, I think their days are numbered. And then we will grow. But it's in this direction. That is, that it's going to be bigger than ever because of these technologies, right? And that's going to be a future video. Okay, so thanks as always. I hope you found that informative. And yeah, we'll be tracking this real estate. I'm sure I'll be addressing it at least maybe once a month, maybe once a week. I think this is going to change dramatically come probably by the fall. Usually markets, if any kind of signs of economic stress does show up in the fall, right? And at that point, we should know. For those who subscribe to the model, if it changes, more than likely it'll change this fall. The allocation will change. And we have to be cognizant of a banking crisis, a sovereign debt crisis, and a currency crisis, right? That's our future. That's why they're trying to force this central bank digital currency, but there's already an alternative the public is more interested in, right? That serves them. Because what will emerge, what will emerge on the other side is what serves the public. If it doesn't serve the public and it becomes a form of enslavement of what you do, what you eat, how you travel, what you consume, or even do, I guarantee a revolution or a popular uprising, as Bob Hoy calls it, is inevitable. Inevitable. The public will never accept it. There is, listen, the Pareto principle, right? We know this. 20% will, don't get me wrong, 20% won't. And it's really that 60% that will be swayed. But I've talked to people and I say, hey, you know, they know what I do. And I say, here's a decentralized renaissance. Here's Klaus Schwab's nightmare. Which one? It's easy. They said it won't be easy to get there, but it's easy what they want because this empowers them. This improves the standard of living of their kids. This gives the kids an opportunity, right? This causes or accelerates the evolution of humanity. And the technology is leading to abundance, the replicator by the end of the century. If you doubt that, you haven't done your homework. That's how close we are, and I'll talk about that in the future, okay? Anyways, well, this was supposed to be one chart, and it was supposed to be short, and it became longer. Maybe it was the coffees. I had too many this morning. But as always, I'm sure when I talk or articulate a message, you're learning something. But tell me what you think anyways. And as always, we will talk soon.